Welcome back. Embattled Chinese real estate firm Evergrande taking yet another hit this morning after the company said it would delay a debt restructuring meeting that was set for later today. Their Hong Kong listed shares falling as much as 25% on the news, which comes just over a month after the company filed for Chapter 15 bankruptcy protection in a U.S. court. For more, let's bring in Dennis Unkovic, partner at Meyer, Unkovic Scott. It's good to see you again, Dennis. And I guess this was a deal that had reassured a lot of international investors, and now it's fallen apart.
Kelly, it not only fell apart, but the Hong Kong dollar to the U.S. dollar is like 13 cents. And today on the Hong Kong exchange, I checked right before I talked to you, it's 41 Hong Kong cents equals one of their shares. So it's really been a devastating blow, not just for Evergrande, Kelly, but for, I think, the overall market.
Yeah, and talk about why that is, because a lot of people want to understand if this is telling us more about the struggles of the Chinese property sector, which I don't want to say you can put to one side, but, are there larger implications for the business community?
Well, in Asia, they have the real estate investment trusts, the REITs. They've been taking they've been really taking a big hurt because a lot of what they've invested, Kelly, has been put into Chinese real estate, which is now down so much. And as 30% of the economy in China is now based upon real estate, I don't think that this situation has been as bad as it is today, really, since 2021, when Evergrande first went in the tank.
So let's talk a little bit about this company, Evergrande. Is it a systemic risk to China's banking system or to the property system there, or is it something less than that?
Itself, as an individual company, Tyler, is not going to bring down the Chinese economy. But that Xi Jinping and his colleagues have got to figure out, am I going to bail out private companies who have overborrowed their money, or am I going to let them go down? On the one hand, Xi Jinping's going to say, I'm not going to do that because the cost might be $1 trillion. And the problem with bailing out, I think that this is the Chinese view, not necessarily mine, is that if I bail them out, the Chinese people are going to bet more in the future. They're going to say, well, if my investment doesn't work, Tyler, well, then the government will bail me out. And that's the box that I think the Chinese are in. And I really think at this point, the Chinese have decided to sit back and wait to see what happens.
So there's a question here of moral hazard, just like we went through during the financial crisis here. So is Evergrande then potentially the Lehman Brothers, as opposed to the other banks that the U.S. did cash infuse or capital infuse back in the financial crisis?
That's a great question. I think that Evergrande is the canary in the coal mine. I think that if it goes down, I don't think the Chinese are going to have any option but ultimately to start bailing out, if not these companies, the people who have invested their money. The problem in China is the Chinese people have given these companies money in advance to build up a house or a condo or whatever they're going to buy. And now those companies are so much in debt that they can't pay it back. And at least the Chinese government, I think, has to protect its own citizens, if not these particular banks. But it's a really tough question.
Do these property developers have enough people to move into the buildings they've built?
No. I mean, I could give you a longer answer, but I think the answer is no. There's several million properties in China that are empty now. One of the problems is we know about the big cities in China, about Shanghai and Ningbo and the rest, but the third and fourth tier cities where a lot of this building has gone on have been damaged. Those properties are empty now. And because the Chinese economy is in such bad shape, the people who were going to live in those areas aren't doing it anymore. So this is really very serious.